Hi, Dean Jenkins with Follow Me Trades, and I'm getting ready to launch a new dividend strategy course. Over the past couple years, I've been looking into this. People have been asking me about this. A lot of traders and investors that I know, they allocate parts of their overall net worth or portfolio. Some for more active swing trading, and some people even day trading, but then some portion for a little bit longer term, a little bit more stable, and more hands-off, investing or trading. And so dividends, a dividend strategy can be a great part of your overall portfolio, your overall approach. So why dividends? Well, you get paid to own the stock, right? They pay quarterly dividends. Quite a few stocks do. And those dividends quite often are a larger yield than other, fixed income instruments like CDs, currently going about 5%, or T-bills just under 5%. Some dividends, for good high quality companies can be 6, 7, 8%. So it's better. And you get some growth on the price of the stock. So in addition to the quarterly dividend, you can have the stock increase in value as well if you choose the right stocks at the right time. And the right stocks at the right time is absolutely key to making the dividend strategy work, in my opinion. There's dividend trading advice is out there, dividend investing advice is out there, and the most common you're going to hear is just, hey, go buy a quality blue chip stock with a good dividend, and then ignore the price movement of the underlying stock and just collect the dividends and wait it out. If it goes down, don't worry about it, ignore it. The price will grow over time. That's the typical advice. My question for that is, well, how much time and how much drawdown am I expected to ignore? Because me personally, I have a hard time ignoring a large drawdown. And here's an example. If you were to apply the common dividend advice to WBA, Walgreens Boots, right? I'm going to look at a couple of examples. I'm going to start, say he bought it at the beginning of 2021, after the shock of the pandemic and things started coming back. So we'll just look at a couple here. What if you bought it at the beginning of 2021? Here's Walgreens Boots. It was part of the Dow 30, a blue chip, paying good dividends, 6.43%. So if you bought that and just held it and ignored it, well, that's a 70% drawdown in 3.5 years. Too much for me. I can't ignore that. I don't care what the dividend was, right? A 70% drawdown? Are you kidding me? So, that's, Walgreens Boots is a, kind of an extreme example, but there are others. And let's just look. What if you had bought Kohl's at the beginning of 2021? It went up initially, right? But say you got in there at, call it $45. Well, it's sitting at $21. It's lost close to half its value. Again, I can't ignore that. I talk about, price going down, like I showed Walgreens Boots and Kohl's, and I've talked to some folks, explaining my strategy, and they say, well, it doesn't really matter if the price goes down. If I own 100 shares of Walgreens Boots, they're just going to pay the dividend, so the price doesn't matter. I can ignore it. Not really, because after a long downtrend, the price is going down over a long period of time. It means typically something's going on with the company, and there's a good chance that the dividend is going to get cut. And in Walgreens Boots, they cut the dividend, and then they eliminated the dividend, and now you're stuck with a 75% drawdown, and you're, oh man, I got to sell this thing, I got to take the loss, go find something else, right? So just buy, hold, ignore the price. That is not a strategy I like at all. There are good examples. Take Dividend Energy. It's a popular dividend stock. So Dividend Energy, if you bought it at the beginning of 2021 here at about $20, you'd be happy. Had a big run up here, and it's still double. So you would have collected dividends all the way, and also had a doubling of the stock price. So that's a pretty good deal. So they're not all terrible, but just kind of blindly, hey, go buy a blue chip company, collect the dividends, ignore the price. that strategy is not for me. So my strategy has a unique twist. So first, just like most strategies, hey, buy a quality blue chip stock with good dividends. That, that is a good start to a dividend strategy for sure. Okay, but what I add is some very simple technical analysis that shows that this high quality blue chip stock with a good dividend is in an uptrend. A long-term uptrend. It's not in a long-term downtrend like a couple of those examples. So we're not going to have to suffer through, we're not going to watch price on a daily basis or whatever. We just want to make sure it's in a long-term uptrend. And then when that trend ends, we're going to get in for that uptrend. And we're talking years here. And then we're going to leave when it's over, right? Months or years, not days or weeks. This is not active trading. You can review this, on every couple of weeks, once a month or whatever, and then make adjustments as necessary. But let's get high quality blue chip dividend paying stocks that are in an uptrend, and some very simple, easy to repeat technical analysis to confirm that. So how's this strategy been working? I'm showing a screenshot from my Schwab account. This is a real account, real numbers. I'm showing the results as of today when I'm recording this video, February 17, 2025. And so I've been, about a year using this strategy in my own account with real money. And you can see, hey, the results here are pretty good. I've got 8 different dividend stocks using the criteria that I teach in the course and that I've sent out, published for people who bought the course when I first launched it. And you can see, some of them had really good returns. Some, Whirlpool's down. Okay, that's fine. We got 8 stocks here. Pfizer's off just a little bit. But the total increase in the share price since I started using this strategy in my own account is 15% gain on the price of the stock. And then they're paying an average, yield, dividend yield of 5.7. So, you add the price increase to the yield, we got 20.87. Call that 21% return on this account. Now, some of these, AT&T's run up 75%. There may come a point where we exit it, and that's awesome. We capture that gain, and then we move the capital over to the next great candidate. So, yeah, I'm really, really happy with the results I'm getting so far, and that, people who have bought the course earlier are getting as well. It's really working just as planned. So really, really good news. All right, so there's 4 modules in the dividend course. First is just dividend basics. How does it work? And there's some key dates to be aware of with dividends. The ex-dividend date, payout date, the announcement date. We just to show how that works, right? And then the strategy I've been talking about. How to buy and hold quality dividend stocks that are in a uptrend, right? The specific criteria for the stocks to buy, the simple technical analysis to determine that it's up in an uptrend, and then how to scan, how to go find these great dividend stocks. I also include a short-term dividend trading strategy for those if you'd like to be a little more active. It's really, there's some specific things that happen around those key dividend dates where you can capitalize as the dividend is announced and as the ex-dividend date hits. So if you're interested in, a little bit shorter term active trading, I include that module. You can use it or not. And then fourth, there's a strategy. I provide a simple approach to a little bit of an advanced strategy. You can use options. You can get paid to buy a good dividend stock selling put contracts, and then you can get paid to own them selling call contracts against the shares you own. So I'll walk through that strategy. Again, you can do the simple thing, just buy and hold the quality dividend stocks in an uptrend, paying dividends. If you want to be more active, you can do the short-term thing as well, and then you can be a little bit more advanced. Again, a simple approach to getting paid to buy the stock you want to pay it, the price you want to pay it, and then getting paid to own it with premium on selling call contracts in addition to the dividend. So that's all included. Written study guide, pre-recorded training videos with that. So the course is live and it's available right now. You can get instant access if you sign up. The price is $9.97, which I think is a great deal. You know, I showed the results that I'm getting. It includes a written study guide, pre-recorded video trading, at least 3 of my current favorite dividend stocks that are ready to buy right now. Those are in the course area, and I update that regularly. And then also I offer a one-hour one-on-one consultation if you choose. We can just examine what's, answer any questions you have, and kind of help you navigate what's an appropriate way to implement this for your unique situation. So that's what's included, and that's the price. And again, I think it's a great value. All right, thank you. And if you have any questions, don't hesitate to reach out to me, Dean at followmetrades.com. All right, take care.